The title of this video is not clickbait. I am selling, and in today's video, I'm going to tell you exactly why. If you're like most people, over the last couple of months, you've probably been swept up by the crypto hype. If you look at altcoins, many of them are up 5, 10, 20x in the last few months alone. If you look at Bitcoin, it's been going on an absolute run explosively from the 19, 20K region all the way to making new all-time highs and hitting price discovery. ETF inflows have been incredible, which is underpinning this Bitcoin rally. And you've also seen crazy things happening over the last few weeks, like the dog with hat crowdfunding to go on the Las Vegas sphere. You see the Solana ecosystem absolutely exploding. KSI is now tweeting again. Funding rates have started to get extremely aggressive. People are taking on a lot more risk, and this is evident via looking at the open interest. And we can safely assert that this is a crypto bull run. But one thing that I want to make very clear is that we're not early anymore. We were early back in October 2022 in the middle of a bear market when I was putting together my altcoin accumulation guide, as you can see in front of you. We were even still early 4 to 5 months ago, last October, November, December, where I was giving you my top videos of altcoins to buy and signaling that a massive crypto bull run was coming. That was the optimal accumulation period because we all know that the biggest gains come from accumulating during the bear market. And I want to say well done to everyone that was accumulating because it shows that you had conviction. While the market was turned against us, everyone was clowning on crypto throughout FTX, Luna, Voyager, Celsius, BlockFi, etc. You stuck around, and now you are reaping the rewards. But if you are new, come and join the family by clicking that subscribe button down below and hit that post notification bell for daily crypto alpha. Here on this channel, every single day, I post altcoin guides, opportunities, trades, and strategies like this one to help you succeed in the market, and let's absolutely smash it together this cycle. So the reason I'm saying we aren't early is because I consider the earliest phase of a new cycle to be the bear market accumulation phase. Then I consider the earlier stages of the bull market to be relatively early, but you're slightly later. And what I believe we're in now is the next phase of the bull market. There are 5 phases. I do believe we are around phase 3. So by definition, we are not early. We are in the middle of a bull run. We're just getting out of the early stages of a bull run. And for that reason, I wanted to give you a practical video today, one that's actually going to help you massively throughout the next phases, throughout phase 3, phase 4, and phase 5 of the bull run to ensure that you actually maximize your opportunity. I've done a lot of altcoin buy guides in the past. I've talked a lot about how to buy alts, and a lot of creators are talking to you about how to buy alts. But what I'm not seeing a lot of creators covering is how to effectively sell your altcoins and take profits on your altcoins. At the start of the video, I said I'm selling, and this is true, but that doesn't mean I'm selling everything right now. I'm selling periodically over time as the bull market gets hotter and hotter and hotter, in line with my full take profit strategy that I'm about to share with you in today's video. Maybe it's not the video you want to watch today. Maybe you want to see a video where I give you a bunch of altcoins to buy on the dip and accumulate right now and something really hypey, but that's actually not what's going to help you in the long run. This is the type of video that I think is going to have immense benefit for you in the long run. So if you watch until the end, you'll be much better prepared to maximize this crypto cycle. So I'm going to give you the full rundown of how I actually take profits in crypto and make sure that I'm able to lock in the gains that I make. It's no use buying something at a good valuation if you never maximize the full extent of the profits from that trade. And it seems so easy, but Mars, if I buy something that 10, 20, 30, 50 X's, I don't need to worry about selling. I'm going to make money. Well, no, just as you have a buy plan, you need a concrete sell plan. Before you buy any altcoin, you should already work out what the conditions are under which you're going to sell that coin, when you're going to take profits, and what are your triggers for taking profits. And that's exactly what I'm going to help you with in today's video to make sure you don't screw up this bull run. So it's going to consist of 3 strategies. The first strategy is my bread and butter of taking profits in crypto. I'm going to run you through the very basic and simple version of the strategy that you can implement today. The second strategy focuses more on where you put your money after you take profits. So it covers the rotation game. And then the third strategy is my bull market exit triggers, because just as you have individual plans for specific altcoin take profits, you should also have an exit strategy for the bull run in general. So what are the signs, what are the indicators, and what are the technicals that I look for to indicate to me that I should be de-risking in a major way? That is what I'm going to show you today. And I'm also going to show you where we currently sit, because I know we've had a little bit of red today and yesterday, and some of you will be thinking, Miles, have these top signals from your indicators currently hit? Well, I'm going to show you towards the end of this video when we go over strategy 3, exactly where we sit within my framework, because hopefully it will contextualize things a little bit better for you. So without further ado, let's get into my go-to method, which is laddering out. This as a concept is quite an easy thing to wrap your head around, but where I see so many people screw it up is in the execution of this concept. So what is laddering out? Laddering out is essentially a strategy that enables you to gradually sell a position over time without having to nail the top or the bottom. Because let's be honest, none of us can accurately predict the top or the bottom in crypto. But there's a lot of nuance here, because in a bull run, selling too early can actually be just as damaging as selling too late. So that's why I implement a strategy called scraping. What scraping is as an altcoin rises in price, I scrape profits off the top in accordance with how much it rises. That way, I ensure I'm constantly adding to my stablecoin balance and maximizing an altcoin going up over time. Now, this means I'm never going to get the full potential of my bag. So if I buy an altcoin for $1 and it goes to $100, that is 100x. I'm not going to make an effective 100x. With this strategy, I might net 30 to 40x, but that is much better than going up to a 100x and round tripping back down to zero like a lot of people did last cycle. And I'm going to be honest, I did this a lot last cycle as well. I hit big trades. For example, I remember I hit a 30x on Flocky and I round tripped most of it back down to like a 3-4x. Luna is another great example. I think I was up like a 20x on Luna and I round tripped that down to around a 2x. So there were lots of examples of me screwing this up last cycle, and I don't want you to make the same mistakes. The goal here should be for you to be able to learn off some of my mistakes, so this cycle you're equipped to actually fully maximize your gains. So let's contextualize this scraping technique on a coin like WIF, because this is a recent example that I can give you to show you the power of this strategy. So let's say you purchase WIF at $1. It's a meme coin, which means the likelihood of this doing a 2, a 3, a 4, a 10x because of its risk factor is much higher than other coins. So what you need to do is assign a multiple to WIF. So when you buy it at $1, you assign a number that you think is realistic as a price target. So let's say you think WIF can 10x in price. So if you think it can 10x in price, now you have to pick intervals between $1 and $10 that are going to be your sell intervals. So for a meme coin or a higher risk coin, a 2x is usually a relatively good interval. You can even go as low as 50%. So I'm going to show you this right now. You have the $1 level, you have the $2 level, and then you have the $3 level. This represents a 100% price rise, and this would have essentially given you, given the fact it has done more than a 3x since $1, 2 chances to lock in some profits. Obviously, if you bought much lower, you may have had 20, 50 chances, but I want to be realistic and kind of give you a very easy way to contextualize what I'm saying. So the strategy here is, in the current phase of the market, on a coin like WIF, because I believe we're still in phase 3 and not in phase 5 yet, I don't want to be fully out of the market. I still want underlying exposure to the upside of a token. My plan changes based on the current phase we're in. Given where we're currently at, I think it's reasonable that every time the token 2x's to take 20 to 30% off the table. You can go more aggressive between 50 and 100%, but I prefer to save these more aggressive profit-taking percentages for later in the cycle when I'm really looking to fully exit the market. For me, I still think there's a lot of upside left in the market, so I'm not choosing this strategy right now. And by the way, the reason I'm picking WIF is just because it's a recent coin. You can apply this to any coin in the market. There's no particular reason why I'm picking WIF for this video. So let's say you buy it at $1 and then it goes to $2. At $2, it's essentially done a 100% rise in price. So at a 2x, I would take 20 to 30% off the table in this scenario. That way, you're keeping an underlying exposure of 70 to 80%, but you're scraping profits off the top. That's why I call it the scraping technique. As it does another 2x, you're taking another 30% off the table. So you're scraping your profits even further. And if price continues to go higher, then every single time it does 100%, you'll take profits again and again and again and again and so on and so forth. Now, as your bag gets bigger and bigger, you can increase the number from 30% to 50% to 60, 70 and more as the bull market progresses and as the token goes higher in price. Why do you want to do this? Well, because towards the end of a bull run, you want to start to be more aggressive with your profit taking. In the beginning of the bull run, you still want some exposure. The other reason why my percentages get more aggressive as time goes on and as the price goes higher is because the token needs to be risk weighted in accordance with the rest of my portfolio. If you have a total portfolio value of $10,000 and now your WIF position is $10,000, representing 50% of your portfolio, obviously that's way too much and you'll need to rebalance. We're going to get into rotating in a second. So by that logic, you should be more aggressive with your profit taking as it starts to eat percentage-wise into the rest of your portfolio. Now let's look at another example because I appreciate that WIF is a token and meme coins and small caps and high risk alts. They're all tokens that can pump a lot quicker than your other alts. I want to give you an example on Ethereum because Ethereum is a larger cap token where obviously taking profits at every 2x multiple is not realistic. So with a token like Ethereum, I prefer to pick a lower number like 50%. So every time price rises 50%, so let's say when it went from $2,000 to $3,000, then I would take my 30, 40%, whatever the predetermined level is off the table. And once again, as ETH goes higher and higher, and as we go further into a bull market, I'll up this number from 20, 30, and now I'll start scraping 70, 80% off the top. So basically what you need to do here, it's very simple. Before you buy a coin, before you've even hit the buy button, have an Excel spreadsheet or a Google Doc, I highly recommend this, where you write down your thesis for the coin, but you also write down your sell plan. So you'll say, every time with 2Xs, I'm going to take 20%. Once it hits X dollar value, I'm going to take X%, and this is going to eventually increase until I've gotten X% back. So that way your plan is fully written down, and when it comes time for execution, there's no toing and froing. Even if the market is euphoric, the key here is having a plan that stays concrete. Then you're trading like a robot, you're not trading on emotion. And the best traders in this market, the best investors in this market, they stick to their plans. The plans don't change as the market pumps. And what worries me, and the reason I'm making today's video, is because I know a lot of you don't have a plan. And that's fine, because you're watching this just in time, but it's a good reminder to have one. As I said, just as you would have a buy plan, also have an exit plan. Now, when it comes to super high risk altcoins that are really low cap, I'm talking $20 million or less in terms of their market cap, you can even be more aggressive and you can take 100% every time at 2x's. So that's essentially getting your initial out. For a lot of people, this is good. And this is a very basic strategy that I implement sometimes with small caps. It's once it does a 2x, get your initial out and then just ride the rest to Valhalla. And if it all goes down to zero, it's fine because you got your initial out and you're making money. An alternative to that, implementing a similar approach here of riding on house money, so that's essentially profits and not principal, is raising your stop loss. So using WIF as an example, if it goes from $1 to $2, you can actually put a limit sell order or a stop loss, even on a spot position, at $1 to protect your entry. That way, if it does round trip and you come back down, you're selling for the same price you bought it at. So that's also a strategy that you can implement. And as the token runs, let's say it goes to $3, $5, $10, you keep raising it incrementally. So you eventually get to a point where you're guaranteed to make a profit. That's an alternative from just taking your initial out. And you can also use this in tandem with each other. So now let's move on to strategy number 2. Now that I hope you have a clearer understanding of laddering out, and that is rotating profits. So this is probably the biggest mistake I see in the market. You've made a 10x on a meme coin trade. You've hit a massive altcoin narrative rotation before it hits. You're probably going to now be tempted not only to take profits, but roll those profits into another coin. This is so dangerous because you're essentially playing a game of hot potato. I did this so much last cycle and Phantom was a great example of this. Phantom went up, I think, from 50 cents to $3.50 or something like that. As I took profits, I started rotating those profits into things like AVAX, even things like Luna, things like Solana. And when the bear market hit, it didn't matter that I made great multiples on Phantom. I didn't make my money. on a lot of that. I made some money, but definitely not as much as I could have because I was rotating to other alts which went down. And I'm sure you can relate to this if you're around in 2021 and 2022. You probably made a lot of money during the bull, but you probably also just sold those positions just for other altcoins. So what you need to do is be very clear on what percentage you take out into stables, what percentage you rotate back into other alts. Let's once again use our favorite coin, WIF, as an example. It really doesn't matter. It's the same for Ethereum. It's the same for Solana. It's the same for AVAX. I'm just using WIF as an example. Let's say you made $15,000. Now, in this case, the $15,000 would have been profits over time from laddering out, not you wrote it from 1K to 15K and you sold it all. That's not what I'm talking about. That is a valid option depending on what stage of the bull we're in, but it's not my preferred option to manage longer term investments. And let's assume in this case, WIF is a longer term investment. So let's say you made 15K over laddering out. You can rotate 5K into stable coins. That way you're banking the profits. You can rotate 5K into Bitcoin and ETH. I would recommend Bitcoin over ETH personally because it's more of a store of value. ETH is a little more synonymous with altcoins. And then you can rotate the other 5% into whatever altcoins you want. If you want to do the rotation game, you can keep it in the market. But that way you're limited to 30%. So even if the whole market crashes, you're guaranteed your 5K in stables. Bitcoin's probably only going to drop 40, 50% versus other alts, which go down 90%. So you've protected half there. So at least you've gotten 7.5K dollar value out of the 15K instead of riding 15 to 0. If you want to go even more conservative, you can just go all into stable coins. The only reason I say Bitcoin is because I'm a big believer in Bitcoin long term. I'm always looking to use altcoins as a proxy to stack more Bitcoin because I believe over a 10, 20-year period, Bitcoin is one of the best assets. That's why I do it. You don't have to. You can go 100% into stables or 75 and rotate the other 25% into other altcoins. Don't get me wrong, rotating is fine and rotating is great because sometimes you need liquid capital to be able to invest in newer, hotter narratives. If you hit an L1 trade and you're noticing, okay, AI is now starting to ramp up, by all means, chase the AI trade if you can make money there, but don't chase it with more money than you're willing to lose if the entire market reverses because, as I said, it's a game of hot potato. You can be making money and making money and making money and rotating and rotating and rotating, but the second that the market crashes and you drop the potato, you lose everything and all those profits were for nothing. So do not let that happen to you this cycle. Let's move on to strategy number 3, which is your exit strategy. So these are strategies which aren't predetermined. Like laddering out is predetermined, right? You're saying, okay, every 2x I'm taking 30%. That's predetermined. Rotating is predetermined because you're saying, okay, I'm going 30% in Bitcoin, 30% in stables, 30% in other altcoins. That's all. They're all predetermined when you're buying the coin. Strategy 3 is utilizing, yes, a predetermined set of indicators, but those indicators are not guaranteed to hit. But when they hit, they trigger something. So I've actually got indicators to de-risk from the entire crypto market in general. Now, these are completely subjective. I'm going to give a couple of examples for you today, but you're going to have different top signals to me. You're going to have different momentum gauges to me. And the strategy that you implement will depend on your trading style. If you're a low time frame trader, you're going to be a lot more aggressive. The second we start breaking down momentum, you're probably going to exit, right? And de-risk. If you're a long-term investor, you're going to wait for higher time frame breakdowns on primarily Bitcoin. The difference is the time it takes for Bitcoin to fully reverse, you would have already given up a lot of your gains. So that's why I do like laddering out over time because then I've secured it. And then once we hit these exit triggers, then I can de-risk some further capital. Let me give you an analogy for this. In the last bull run, you would have been selling all the way from phase 3 to phase 5, which was 30K to 70K Bitcoin, right? You would have been selling over time. Your average sell would have been around 50K, let's say. One of the main exit triggers that a lot of people had, and this is, I believe, one of the strongest exit triggers in the market, is a break of the 200 MA on the daily time frame. I still use this to this day. So this exit trigger did not actually confirm. So we had a first exit trigger where you would have sold some off and then probably bought back. But it didn't confirm for a second time until April 2022. And at that point, Bitcoin was 45K. So you would have laddered out, locked in profits around 50K if you were laddering out. And then your next signal to exit would have happened around this period here of around 45K. So that would have meant, if that was one of your exit triggers, that you weren't able to time the top. So you may have bought here, rode it all the way up for a portion of your bag. You've just got to accept that you're not going to get 69 or 70K. You're going to get mid 40s or late 40s at best. Because the thing is, right, if you actually want to zoom in, this top wasn't obvious at the time. Some people called the top, I didn't. And pretty much no one can consistently call the top. At the time, it would have looked like a pullback like this. So when you went back to 50, a lot of people were saying buy the dip, and I was actually buying the dip at 60, 50 again. It wasn't until this second confirmation that I was like, oh, wow, okay, things are getting ugly. I've got to de-risk some here, right? So you're never going to be able to time the top. The sooner you accept that, the better, because then you can have your exit triggers that, okay, they're going to occur slightly later because higher time frame indicators take some time to play out, but because they're higher time frame, they're also higher probability. If you use low time frame indicators, you get less reliable results. So I do like the 200 MA as an exit trigger. If we convincingly start to break down below this level, it's currently sitting at 45K, but of course, as Bitcoin trades higher above this level, it will even out over time. If Bitcoin goes on another rip to the upside, this will go even higher. As it starts to break down, it is a very good momentum gauger that historically I've enjoyed. Because when we get breaks, it historically stays above for a long period of time. It historically stays below a long period of time when it breaks down, and I just generally like using it. You do get fake outs, so you might have to go a little bit nuanced with like, okay, it needs to be below for X amount, let's say like it needs to be below for 60 days, it needs to retest twice and get rejected, etc. It needs to confirm below on the daily time frame. You can put these strategies in, but a general one I like is the 200 MA. Another one I like, which I highlighted in a thread I wrote last night, is the 9 MA. This is more for shorter term positions. So just as you have your macro bull market exit triggers, you also have maybe individual altcoin exit triggers. For that, I really like the 9 MA on the daily. It's a great momentum gauger for altcoins. So those are two of the indicators that I use. Your indicators, as I said, will depend on your trading style. And then of course, you have non-technical based exit triggers. Non-technical based exit triggers are going to be exit triggers from other parts of crypto. For example, Coinbase is in the top 10 crypto ranks for 20 days consecutively. You can actually track this on something like the Coinbase app rank bot. That could be a trigger for you because historically, when Coinbase is in the top 10, that means retail's in, that means things are likely getting frothy. Another thing you can do is start looking at some of these historical top signals. We're actually already seeing some toppy frothy signs, which is one of the reasons I think why we got the recent pullback. For example, like open interest flying, you've got people extremely bullish, you've got funding rates going crazy, you've got meme coins like WIF on the Las Vegas sphere. You can come up with your own set of top signs that might be like celebrities tweeting about crypto, KSI tweeting about crypto, like all this sort of stuff. Obviously, you won't base your entire exit strategy based on those sometimes subjective data sets, but you can use that in tandem with something bigger, like, you know, a 9 MA strategy or a 200 MA strategy for a breakdown. So that pretty much separates things a little bit. So you have your altcoin exit strategy, which is laddering out over time. You also might implement that with a technical indicator like a breakdown on the 9 MA on the daily. And then you'll also have your bull market exit triggers, which is a general sign, which isn't just altcoin specific, to de-risk across the entire board. And that might include a variety of top signals, a breakdown of Bitcoin on the 200 MA. You can also do Ethereum as the leader of the alts. That's often a good one. Bitcoin dominance breaking above a certain level can also be one. So keep those in mind as well. I've just given you some of mine, but the ones you use are going to be specific to you. Earlier in the video, I said I would give you an update on where I think we currently are. And if you look at the chart, you can probably already work this out based on what I've told you, but we're comfortably sitting above the 200 MA. So from a macro perspective, Bitcoin is bullish. I guess the scary part, but also the healthy and natural part about bull markets is you do get these big flushes. We saw it in many times in 2021. If you just want to look, we saw this major flush in January. You saw a major flush in August the year prior in the initial run up as well. Of course, in May, you even saw this major flush out before the second peak. So these pullbacks are normal, but it definitely will scare you and do its best to shake you out. But you actually need them for the market to be healthy. I'd be much more concerned if we were pumping in a straight line than having dips along the way. Let me make that clear. And also, I mean, Bitcoin is still technically above this major resistance level. It's flipped it, an SR flip, so it might come down and retest, but this is obviously, you know, great for Bitcoin, and it can provide the basis for the next leg to the upside. That's what I hope, at least. So structurally, the market is good. The pullback today wasn't too alarming. You might be watching this in a couple of weeks and the market's back to normal. It might be lower. I can't tell you right now, but what I can tell you from a macro perspective, things are looking okay. No need to panic, but very needed video for you nonetheless to keep in mind. And look, when things get too euphoric, just remember this video. Come back to this video. Make sure you are planning in accordance, at least with some of the principles I talked about. You don't need to use the exact numbers or the exact indicators, but at least keep this framework in mind, because I think it'll save you a lot of money and hopefully make a lot of money this bull run. And I don't really want to make this video again. I might make it once more. This is like really a one-off thing for me. So please, I mean, I'm going to probably link this in a lot of videos in the future underneath the video, especially in bull market euphoria. Because and so if you're a new viewer from Mars in the future when we're exploding and a bunch of retail's back, welcome to the channel, I guess. I made this for people like you to remind you that you got to sell as well as buy. So I'll see you in the next video. I hope this video was valuable. Actually, on the weekend, I think tomorrow, by the time you're watching this, it may already be out. I'm releasing my altcoin buy the dip guide. So that one's going to be good. I'm going to share a bunch of alts that I'm actually accumulating. So you're going to enjoy that one if you're more on the on team buy. But remember, also join team sell. Try it out sometime, because it can be a pretty helpful tool if you actually want to make money in crypto. I'll see you in the next video. Peace out.